is breaking news.
Well, the news that we are waiting for, here it is, the January employment figure, a fall of 3,700 in the month. The unemployment rate rises to 6%, above expectations. The participation rate has gone up to 64.5%. So that's the reason for that. Full-time jobs, we've lost 7,100 in the economy, but the top line is the unemployment rate going above consensus. The Australian dollar was fetching 90.23 pre-release. Although a lot of the shorts were already flushed out, in fairness, based on some news that we got from the Reserve Bank, as you will know. But, of course, the RBA itself is projecting an unemployment figure of 6%. It's more the timing of when that actually happens. And I've got Simon Boulton from Aequalis with me. Simon, a miss on employment for the month of January, a decline, in other words. What do you make of that? Just walk me through it.
I think it's against expectations. I think that most people have forecasted jobs created through the month of December. It's probably something, that 6% mark, everyone knew it was going to happen, but I think it was going to happen much later. So look, it's a poorer result than I think people were expecting and people wanted. And interesting that we've hit that sort of threshold of 6% so early on in the year.
The participation rate going up, the market was of the view it would stay static. Was that, to your mind, ever going to happen?
Look, that's the thing that's really behind all the numbers, isn't it, Carson? I think that there is an increased number of people leaving the workforce. Job creation being as low as it is means that people are still going to be exiting. So that participation rate, I think, can only be affected by the part-time and component of what those numbers are. So it'll be interesting to see what that breakdown is.
Aggregate hours worked, this has just caught my eye as well. There's been a rise there. So even though we've seen part-time roles, and that's again, I suppose, continuing a trend, confirmation now that although we've lost a sizable number of full-time roles, there's been a build in the part-time space. There had been some hope, and I know you'd expressed this, that we might reverse that trend, which we saw all through 2013, where really net the only new jobs were in the part-time space. It doesn't look as if that's been broken.
No, I think there is this pause still on, Carson, where people are keeping up to speed by having this hedge your bets sort of part-time or contract hiring going on. So it's, again, not surprising that has increased, but there still seems to be, where are we going to create jobs? That's really what it's about now. The economy needs to create jobs and create them quick so that we can keep that unemployment rate either at that 6 or trying to get it back down into the high 5s.
If the Treasurer is right, we've got a budget pending, of course, which he'll be presiding over for the first time. Inside of that, he is flagging, is he not, infrastructure as a key plank of policy. So maybe that offsets the cooling in the mining, at least exploration phase. What do you make of that?
I think that is one of the areas that there is skill transfer. People that are coming out of the mining boom or people that are part of those job losses in that sector do fit quite well to the requirements of an infrastructure area. The PPP world, that's another one that's an interesting one to watch, with the government wanting to increase revenues. I think we're going to continue to see some activity in that. So there are things out there that I think can at least maintain the employment level that we've got. But hitting 6% so early this year is a big surprise.
I'm just seeing it on that screen. It's not Tim, it's time on employment. What I'm intrigued by as well is what's happened with the Australian dollar, because it was fetching 90.23. It's lost about 80 bips. It's gone below 90 now to 89.44. So we've got a currency analyst standing by. There's always a knee-jerk play on this, right? It will inevitably kind of find a middle mark, but that's unmistakable, as you can see on your screen there.
And we've had it going the other way before, Carson. That's the other thing. So it is a short-term knee-jerk reaction, but I think fundamentally that number being higher than people expected is always going to have an adverse impact on the currency rates.
Talking to Juliana Rodley from ComSec before this release, she was referencing the fact that we're going to be getting now, in successive jobs releases from the ABS, 2011 census data, new base figures. For the layman out there, Juliana was expressing a view that is going to mean more robust collection, more targeted collection. How important is that?
Look, these numbers have always been a bit shrouded in mystery, Carson. We've sat here and been surprised. So the calculations, again, I'm not familiar with what exactly and how it's done, but I have wanted often to be at the ABS for the month and see where these numbers do come from. So it's complicated. I think that I can't fully explain what those methods are. But the interesting thing, though, is who can tell us how this number is calculated, because it is sort of...
There's something in it for everyone, I suppose. You could argue it that way, right? You can take a little bit of conjecture here and there. Let's get that currency response, though, if we can, from Joel Murphy at Pepperstone. Joel, looking at the A dollar, off just on 60 bips, as it were, against the greenback now to 89.52. What do you make of that sharp reversal? Is this the market overreacting? Is it the market saying maybe we'll get some more rate cuts?
Oh, I think the market was a little confident leading into this read. We've had some pretty solid Australian-centric data across the last fortnight, and that's seen the push back to 90. We were trading up at 90.67 US cents overnight, so we're obviously a full cent down from where we were trading only about 16 hours ago. And that's what we saw in Aussie dollar trading yesterday in response to Chinese trade balance data. The market really didn't go too far ahead because they were keeping an eye on today's data, and the shock of the headline rate really has pushed those who are a little bit bullish or starting to get a bit bullish on the Australian dollar just back down a bit, and that's why we've seen such a rush back down into that mid 89 cent range almost straight away.
Another interesting pairing, Joel, just whilst we're with you, is that cross with the Kiwi. The NZ dollar's risen to 92.92. It had been at 92.26. So again, that one leaps. What are you now eyeing as I suppose the next support level for the Kiwi dollar versus the A dollar?
Well, the AUD dollar, Kiwi dollar has been very interestingly trading. It's really a battle between what movements are going to happen within the central banks. Obviously, the RBNZ had pushed their movement back a little bit further. We're waiting for a bit further inflation data before they made a move, and their figures come out quarterly. So that gave them a couple of months where we might see no movement taken by the RBNZ, which had seen the Australian dollar performed a little bit better across the last few weeks following on from that meeting. And now, after our own Reserve Bank met, we just saw a little bit of bullishness back. The Australian dollar was trading above 109 before this data had come out, so we've seen it track a little bit back. And we've always kept that mark of about that 106 Aussie versus Kiwi as a figure if we do see the run continue for the New Zealand dollar.
Joel, pause if you could, and to Simon Boulton from Aequalis as well. We've got David Thirty, the CEO of Telstra, moving into some live remarks to the minute.
It will be done as the business performs, and that's the critical nature of what they consider, and therefore they felt it was timely to do it at this stage. Okay, so let's go. I can probably take another one or two.
Actually, have you got another question for David?
Yep, just one more on mobiles. I mean, I know Optus's result in terms of mobile subscriptions was not that good this morning, but what is Telstra doing to increase its market share going forward?
Look, we believe that customers want to use mobile networks that have the sort of coverage we have at 2.3 million square kilometres, which is nearly twice as the size of any other operator in Australia, because we use these devices, when we're on the roads, when we're in the parks, we want to be connected as much as possible. They want a network that goes quickly, is reliable, doesn't get dropouts, and has very few black spots. So the thing that we are focused on is continue to invest in innovative, leading-edge technology, great coverage, and also, we'd like to think, great service as well, and innovative products. That's what we're focused on, and that's what we're going to continue to do as we move forward.
Okay. Can I just ask one more question in relation to the one that was asked before? Did you say you're currently in talks with two different companies in Asia about further expansions or partnerships?
I said we're working with a number of different operators around the region. I wasn't specific on the number.
Thanks, Max. Operator, we have Mitchell Bingaman from The Australian next. Thank you.
Thank you. Go ahead, please.
G'day, fellas. I've just got a couple of questions.
Yeah.
The first is just around the productivity drive. In the past, you've talked of the need to achieve about $1 billion a year in productivity gains.
Yeah.
So this half you've done about 230 million.
Yeah.
Just wondering what that means for the rest of the year, if it's going to have any effect on profitability or any other parts of the business. And second question, probably one for Andy. I think, Andy, in the analyst call, You were speaking about the NBN transactions, and I think you said that if they could be consummated this year, then an extra 2.5 billion in associated payments could flow through in the next year. I was just hoping you could clarify that for me and just talk about and explain how those payments would be made up.
Great. So let me take the first one and I'll pass to Andy. So yes, we have repeatedly said that our objective is to achieve gross productivity savings of around $1 billion every year. In the first half of this year it was 225 million. It's mainly timing, Mitchell. We're still confident that we will get close to that objective through to the end of the year. We must. As we have said, over the next 2 to 3 years, we've got to continue to restructure this business to allow us the right to invest in new businesses. But yes, there's a timing challenge, but we are still confident of achieving that. So in terms of the NBN question, let me throw to Andy, and he will be able to answer it for you.
Yes, good morning. So the answer was in relation to a question about some guidance we gave 2 years ago that we expected our cumulative excess free cash flow to be between 2 to 3 billion over a 3-year period, subject to the rollout of NBN, because that obviously influenced it. And I was providing an update in relation to what our free cash flow position is, which is 1.8 billion at the half year.
David Thodey there. Continue watching that live exchange with the Telstra CEO on Sky News Multiview. We're putting it and making it available for you if that's where your interest remains. But we must remind you, if you're just joining us, of the breaking news on January's unemployment figure, which has risen as expected, but it's the measure of the gains that wasn't. We've gone up to 6%. We had been sitting pre-release at 5.8% rather, and the consensus was we'd go up to 5.9. But there has been again a continuation into the new year of job shedding, more sizable job shedding in the full-time part of the market, the labour market, coming really at the expense of those who are managing to garner some part-time roles. Simon Boulton from Aequalis, drilling down into the ABS release just now. What is interesting is the gender split too, in terms of where the most significant losses have come and who's affected. What do you make of that?
Look, the full-time unemployment was down in the male category by 5,400 people compared to the female component, which was only 1,700. I mean, to me, it suggests that it's the blue-collar area that's probably suffering the most, which is consistent with, I think, the WA and Queensland rates increase. Be interesting to see that breakdown actually when it comes out of state by state.
Well, I'm seeing that actually here. The largest absolute decrease in employment was Queensland. It fell 11,600. The largest increases, seasonally adjusted, NSW 8,400 firmer, and Victoria. Now, I'm guessing that's what we had to see to justify what's going on in the housing market in those states.
You'd have to think so, yeah. I mean, it's consistent as well with the long-term view that people have held for some time. I don't think we can get away from the fact that unemployment is going to be rising until we're able to create jobs to keep up with the jobs that are obviously being lost. Then it's going to be fundamentally a balance that's really hard to shift.
How do you characterise in this first glimpse for the new year, really, of trends? How do you characterise the overall economy looking? Is it sufficient, or is it even accurate to call it a multi-speed economy still, or from these numbers, is it more, has it shrunk from a multi-factor kind of equation to something narrower, just a couple of winners and then a couple of losers, like them and us? How do you judge it?
Well, it's difficult, isn't it, when you get news like this, which everybody sort of gets in a bad mood about. But I'm looking at the headline here of Narev and CBA's results, and Telstra's numbers aren't looking too bad. So you do get these mixed signals, like you say. You've got companies doing record profits. You've got unemployment rising, and that 6% number I think is important as well, because people just have that as it's gone over 6%. The 5.7, the 5.8 doesn't sort of have that much resonance as a 6. So it is a two-speed economy. Well, certainly there's imparities around. With record profits and increasing unemployment, how does that happen? I mean, one of the reasons CBA has been so successful is productivity. That is really what their driver has been, productivity.
I.e. cost out, more for less.
More with less, yeah.
So hence those aggregate hours worked rising.
Right, going up. People are working harder because the numbers of people are falling.
You do land on, though, perhaps the most exceptional of examples, Simon. I mean, to say that CommBank is the economy is rather kind of over-egging, is it not? It is a law unto itself.
True, but I mean, it's not there in isolation. You know, there are other businesses that are releasing good numbers, but at the same time, again, mixed messages because there are mining companies that are going into voluntary administration. So there doesn't ever seem to be one strong path that you can follow. There isn't a broad brush that covers everything. You know, it's patchy, and it will be patchy, I think, for some time.
I'm just intrigued as well. The RBA was forecasting a rise to 6%, but perhaps not quite as soon as we've seen today. Do you think that's ultimately, though, in the real economy going to matter? In other words, even if there are further rate cuts, doesn't that just send further signals that we're in troubled times?
I think there's no doubt that there's pressure. I mean, you know, we've got the job losses that are going to be happening in the car companies to sort of start to take their effect over the course of the next probably 3 months. But you know, I don't think it's distress. We're still experiencing slow economic growth. We're not going backwards. So no, I don't think there's necessarily a crisis that we're sort of approaching. I don't get that impression, but I'm not an economist. But certainly there are still patches of positivity around the place. People, I think, just need now to actually make decisions. Last year was all about maybe we will, maybe we won't, hedging the bets. And I'm hoping this year that we'll see a bit more definitive decision-making made.
What looks inviting as we come into the second month of the year in terms of sectors that are looking buoyant and perhaps have turned a corner? So they might have been coasting in demand for workers. Are you noticing any discernible pickup away from what the trend was last year?
I think that there's service industries that we're expecting to grow stronger, tourism being one. Retail could be on the rebound. The financial services, obviously, they're doing quite well, so there's hiring there. So no, I think there are areas where, sector-wise, there is differences between that and some of the mining companies are releasing some pretty bad numbers.
So you are seeing opportunities in financial services. At kind of what level? Are we talking managerial positions? Are we talking further down the line? Because on these numbers, it seems that particularly with male workers who occupy the lion's share of those roles, they're getting retrenched, not gaining jobs.
I think there is a shift in the job market, certainly in the financial services sector, where offshoring has been a big part of their strategies, which means taking relatively not low-skilled, but jobs that can be done elsewhere. So we are seeing that large number of people doing lots of work shrink because all of that work is now going elsewhere.
And
to
yet,
be done.
to go back on your Ian Evans example, referencing that, he was at pains yesterday to say, look, we've taken heed of the customer view on that, and it will not be something I preside over. Those jobs are being brought back.
Yeah.
Do you see that showing up as yet in demand for the kind of the nuts and bolts, the answer the phone, I've got a complaint on my cards type of position?
I don't think so. I think that's still going to be a part of the business that is done elsewhere. It's it's commoditised to a degree. So I mean, Narev's comments on offshoring are interesting because he stood by that mantra throughout his seat there. And they do have it happening in different ways, but certainly not in a wholesale fashion at ANZ, for example. Wholeheartedly sort of looking at Asia expansion and talking about it. CBA are doing things, but behind the scenes, I think that's the other thing. A slightly different style to some of the other banks.
Is there a circuit breaker that you're looking for? Is it likely, do you think, to come from greater government clarity on, we were saying this before, maybe rolling out some grand scheme on nation building, bricks and mortar, so rail, roads? Is that going to prove inviting? Is that going to shift sentiment?
I think it should. I mean, I think it should, particularly in that male unemployment rate. We should hopefully see that sort of thing be able to take it up. Infrastructure is certainly one of those things that is hot on the press at the moment. I was just with a client in an infrastructure company before coming here. There are still large bids going on in that space. There's room for improvement, and the government is incentivised to start generating some revenue by flogging these things off.
Are you happy also with the skill set lists that the government's working to when it